Hi, I hope all of you out there are feeling grand. This is a quarterly budget analysis tutorial, which is commonly used in the business world that serves the purpose of tracking and ensuring business spending is according to plan. It allows users to find relief from financial headaches where it justifies the use of funds and the accuracy of future plans. There is a detailed guideline on the link below should you encounter any more problems after watching this tutorial. Now, take a look at the quarterly budget template. First, fill in the date you have prepared in this template, then followed by the company name or logo here, and for the quarter ending here. There are 4 quarters each year: January to March, which is considered the first quarter, April to June, the second quarter, and so on. So each quarter ending will either be the end of March, June, September, or December. As you can see, there is budget amount and actual amount. Budget amount is the estimated amount and actual amount is the original amount that is incurred on that specific item for this quarter or year to date at the column prepared respectively. This quarter simply means the particular quarter that the user prepared the budget template, whereas year to date is the amount beginning at the start of calendar year up to the current day. Variance is obtained by subtracting the budget spending from actual spending. Next, we look into the budget item, where the sales revenue is profit earned from selling goods or services in the daily operation basis of the company. Cost of sales, also known as cost of goods sold, refers to the cost of goods or services in a particular period of that company. Gross profit is the total profit made from sales, which can be obtained by subtracting cost of sales from cost of revenue. Now, we continue to the variable and fixed expenses. Variable expenses are costs incurred by the direct result of producing the goods or services. It is positively dependent to the number of output. The higher the output level, the higher the variable cost. Total variable expenses is the sum of all the variable expenses. It can include materials used, direct labor, and so on. Fixed expenses are the costs that remain the same and not influenced by the number of output. It can include insurance, office expenses, and so on. Total fixed expenses is a sum of all the fixed expenses. Then, we will carry on to income from operations. The amount of this will be calculated by the template itself by deducting the total variable and fixed expenses from gross profit. Interest income is the interest earned on cash temporarily saved in the savings account, certificates of deposits, or any other investments, while interest expenses refer to the cost of funds loaned to a business by the lender that is recognized within an accounting period. After filling in these 2 items, this template will calculate the net income before taxes for you, where net income before taxes is the total profit before taxes. It is important to the users to understand how much profit the company can earn despite of the taxes. It is obtained by subtracting interest income and interest expenses from income from operation. Taxes will be based on the percentage charges by the government on the net profit at the particular period. After that, net income after taxes will be calculated by the template, also by deducting taxes from net income before taxes. Lastly, we will look into non-income statement. It is important for the company to know the non-income statement items, as the company could seem profitable in its primary activities but still have a probability of facing losses from non-operating expenses. Loan repayment is an amount of money that is set aside to pay for the loan that is borrowed from the lender. Owner withdrawals is the amount of money withdrawn by the owner of the company, while the dividend is the profit given out to the company's shareholder. Both of these will reduce the equity of the company have in the business. Fixed asset expenditure, or sometimes better known as capital expenditure, where the company will invest in certain fixed asset under the name of company, example, company car, buildings, equipment, and etc. After you fill in every column, you will see a complete quarterly budget analysis such as this demo. That's all for my tutorial about the quarterly budget analysis. I hope that this video has been an informational guide for you to gain better understanding of the use of this template. Thank you and have a nice day.
To get informed about all future free webinars, just follow these 3 simple steps. First, enter your email address. Then, hit the subscribe button. A message will be forwarded to you. Confirm the message and you are good to go.